It gives me great pleasure now to bring on board Jim Rogers to talk about what he makes of the market right now. And there you go, you can see him live on television, all getting ready. Good morning, sir. How you been?
Good morning. I'm fine. Thank you very much. Happy New Year.
So what's keeping you busy this year?
So far, not much. I'm basically watching. What I am watching mainly is there's so many people who are pessimistic and so many people who expect a recession. When everybody knows something is going to happen, it usually does not happen. So I'm trying to figure out the best way to play that. I suspect the markets, including India, including America, will go up more than we expect for a while because everybody knows a recession is here. Maybe it's not.
Okay. Uh, so now you've told us what you're watching. Tell us what you are buying and what you're selling.
Well, I'm not buying anything, as a matter of fact. I too was swept away with, like everybody else, expecting bad times to come this year. I know bad times will come sometime in the next few weeks, months. So I basically did nothing for a while, and now I'm sitting here saying, I regret it. I mean, I own commodities, as you know. I own gold and silver. I haven't bought any, but I own it. But I'm watching. I made the same mistake that a lot of people made.
A very basic question on gold. Gold is supposed to be a hedge against inflation. Gold is supposed to outperform because if inflation goes higher, it protects your purchasing power. But the conundrum is that gold in last 3 years has done precious little. Why is gold not keeping up to its reputation of being an inflation hedge suddenly?
Well, I know that what is supposed to happen is another one of those cases of what everybody knows doesn't happen. Yes, gold has often been an inflation hedge, but many times, as you know, I'm sure you watch ET now, many times gold has done badly no matter what's going on in the world. So, I mean, I wish life were so simple.
Okay, so that's the take coming in. I'm guessing that perhaps people must be buying more gold when it comes to the Valentine's Day gift as well. Jim,
Valentine Day gift, Anisha, that's a new one for me. I've heard people buying roses on Valentine Day. You actually
let's
get
up
gold.
the game. I'm just
No, you got gold
leaving
on
small
Valentine Days,
hints.
Anisha. I'm just curious. That's
I'm
the
leaving
first one I've
small
heard.
hints that perhaps it's not a diamond, gold this time. Let's see what I really get. But Jim, if you had to buy something, what would that be?
Well, if I had to buy something, I'd buy silver. Silver is much cheaper than gold on a historic basis. But I did send my wife flowers today and my daughter's flowers. So I bought flowers and maybe some silver. Here's some silver in my pocket.
In your pocket, so you have it handy, and that's a sweet gesture, Jim. But clearly not seeing any love. I know you were talking about all that pessimism, and perhaps back home as well. We're discussing a lot of factors like inflation, maybe not recession back home. But what is it that you're expecting is going to be the next big trigger in terms of what is going to be that asset class really that is likely to outperform down the line? What do you believe one should do when it comes to diversification in their portfolio?
Well, I would say probably Japan, probably China right now, because both of those markets are still down from their historic highs. Maybe India. I mean, India's been a strong market for years, as you know. Somebody's done a very good job in India, but I would suspect Japan or China would be a better place to diversify.
So diversification is the name of the game. But Jim, what about the dollar? Of course, from that 115 level, we had seen the dollar index reverse quite a bit, but it's been quite sticky around that 103 zone. Do you see a bit of a correction here, or is it likely to head higher?
Well, first of all, no, diversification is not something I am keen on. Diversification is something that brokers thought up so that they don't get sued. If you want to be successful, you don't diversify. You focus, you focus, you focus. You have to be right. If you're wrong, you're going to go broke. But if you want to be rich, you have to focus narrowly in the right things. So please, I know everybody talks about diversification, but I'm not going to talk about diversification. As far as the dollar, I own US dollars. I expect the dollars to go higher before this is over, because when we have turmoil again, everybody's going to look for a safe haven, and they think the US dollar is a safe haven. It's not. It's not. but everybody thinks it is. So I own a lot of US dollars still.
Jim, now whether it is recession or peak of inflation, some would argue that interest rates globally are nearing its peak, at least in the interim. Is it a good time to park cash back to bonds?
Well, cash, it depends on which cash, first of all. If you own the wrong currency, you're going to get ruined. I am not buying bonds. I expect interest rates to go higher over the next few years. I mean, you don't remember, but in 1980, when we had the last inflation, interest rates on short-term treasury bills in the United States were 21%. That's not a typo. Short-term treasury bills were at 21%. It's going to take a lot to kill inflation this time because inflation is worse now. Not this month, not this week, but before this is over, interest rates will go much, much higher.
Jim, the joker in the pack is that Ukraine and Russia are still at a war. Now, there are two assumptions here. If they continue to remain at war, what impact it will have on inflation and commodities? And in next 6 months, if there is a ceasefire, how will that impact commodity prices and underlying demand?
Very good point. If I don't know why this war keeps going. I don't know who's getting anything out of it, neither Russia nor America nor Ukraine. But if it ends or if there's a ceasefire, everything is going to react. Stocks are going to go up a lot, bonds will go up a lot, and oil will go down, grain will go down. But what I plan to do, if that happens, is to buy grain and to buy commodities because that will be a buying opportunity.
You've always argued that Chinese markets and the Chinese economy, they have a lot of inertia going for itself. But last 2 years, if you examine the Chinese stock market, the Chinese administrative policy, the Chinese capital market, real estate sector, one is getting a sense that China is speaking out to its growth. What implications do you think that will have on global growth per se?
Well, I get the impression just from reading the press and from ET Now and things like that China it has been very restrictive internally for a while, but it seems to me that something is changing and that China is now trying to be more open to the outside world. If that happens, it's certainly going to affect the Chinese economy, but it's going to affect the worldwide economy. I mean, there's been very little travel in China or out of China for 2 or 3 years. The travel industry, tourism everywhere is going to prosper if they really are opening. And it's my view that they are opening up more than they were before.
Comes back in full bloom this year. Do you think it will have serious implications on demand and commodity prices?
Wait, I'm sorry, what?
Now, if China comes back in full bloom, if the restrictions are lifted, if COVID normalizes, is there reason to believe that it could lead to serious price inflation, especially in metals and commodities?
Well, it will add to inflation because whenever there's more demand for something, prices go up. And if prices go up, that's called inflation. And certainly will affect metals, it will affect food, it will affect everything. I mean, China's it's the second largest economy in the world, as you know.
Jim, apart from drinking water in a silver cup and stocking silver and gold in your pocket, what else would you recommend our viewers would do for people who are looking at investing and creating wealth in the medium to long term?
I learned silver from India, by the way. The Indians have staggering amounts of silver, as you well know, and gold. I think India is probably the most important factor in the silver and gold markets anywhere in the world. So this is something else I learned from you. And I do drink out of a silver goblet. It was my mother's goblet, for what that's worth. I'm sorry, I forgot your question. I got so carried away with silver.
Okay. Jim, I remember we had a conversation and you said that for me, it's very simple. I would like to eat rice because I'm bullish on commodities. I would like to buy rice and eat it with silver chopsticks in a silver cup, so to speak. Has that habit changed, Jim?
Well, I still own my silver chopsticks, by the way. Again, I learned about silver from India. When I first went to India, I found silver and gold everywhere, and I learned a lot from India about many things, but especially silver and gold. No, none of that has changed. I am still optimistic because I know that once we have the big rally, inflation is coming back. And when inflation comes, if you own the things that go higher in price, you make money. I don't like inflation. Nobody likes inflation, but politicians are not very smart.
All right, Jim, it's been a pleasure interacting with you. Lots of interesting pearls of wisdom that we've got. Dollar index will go higher, and that's largely on the back of its perception as a safe haven. But he believes that staying focused is more important than diversification. Would buy grain, commodities, not buying bonds. And of course, that view on silver and gold continues to, as Jim says, he continues to own commodities. Okay, let's just quickly